All right, guys, today is the 11th of June 2026. Today is the second session of the CRAZII Asia Cup revision. Ahead of that, now today is the start of the World Cup. Today is also the fourth day before we start, our own Asia Cup itself. All right, the numbers are still quite low at the moment. Hence, therefore, we will see how it goes. All right, end of the day, we will let you all know and see how it goes, right? Because the thing is this, I understand some of you are now on holiday, you're on the school holidays, so you're prefer not to trade. I understand. So then we will see how it goes, right? But nonetheless, the revision will still continue and the subtitles will be available tomorrow, right? So before that, make sure that we understand disclaimer apply as usual. I will do some sharing of the market. I may do some live sharing. It depends on the market if I can touch my MT4. Right, but nonetheless, today the main thing is this disclaimer. And also do note that my job today is to teach you step by step on how to apply K-trend and use pivot to your advantage. Okay. All right. Now for competition, obviously you should know that if everybody is same so-called capital percentage. Some may start with 2,000, some with 5,000. It doesn't matter because your total deposit and your winnings are based on percentage to calculate. All right. A person who put 10,000 win 10,000 is 100% gain. Correct. But if a person is 1,000, make 1,200 is 120% gain. So it's not the value, it's actually the percentage gain, over the capital deposit. So do take note of that. So of course, then how to win this competition is very simple. You just have to make sure that you know how to use small money to make big money, and big money, how to roll the money to make sure that you keep on making money. All right. So example, you do a trade, okay? You do a trade, and then after that you are winning, right? Now a lot of people just close position and then end the day. But for a competition, if you need to win big, you need to go for it. So the first thing first is right, why we give you 15 markets for you to expand your general search in a day is to find, you should basically find market that potentially will have a big upside or big downside. But of course, you ask how I know which one's going to be big. I mean, which one? So you to check the current situation versus the nearest KCB. If there's a KCB that is very nearby you, then of course you should try to take that trade in. Right? So you have a KCB that is beside you, you know that how much the market can go potentially, then you should go through the flow. But of course, it really solely depends on the market, whether it's the direction is that going in that direction, that the buy or sell is going towards that direction. That one you have to look at the market to decide. Yeah. So I'll do some sharing with you and then you will understand this better. Okay. All right. Over this 1 hour session, you are allowed to ask me questions. I'm more than happy to share with you. Okay, let's hope I can see my MT4 right now. If not, we'll use all the PowerPoint slides I prepared for you. Yeah. Okay, so let me see. Am I able to turn in? Nope, I'm not able to do anything. Okay, no choice. Go back to the PowerPoint slides instead. Okay, never mind. I already on off my computer at least 3-4 times. Still the same. Yeah. Okay, never mind. We will use charts that I always print screen to do the sharing with you. Okay, that we just explain from down there. All right. Okay, so let's just continue. Okay, let me find an example first for you to understand this better. Let's give me a while. Okay, now I give you an example like this, yeah. This one is the dollar yen chart. Now on this, remember dollar yen back in April, right? Dollar just recently when the BOJ Bank of Japan came in to intervene by basically selling down by selling the dollar to strengthen the yen. The yen basically collapsed all the way down to here, right? Remember? Okay, so this entire KCB is a very good big candle, right? So I told you guys that if you are able to hold your trade in, you can consider to trade this particular candle. And truth be told, you can see that the market really go all the way up to here. In fact, now it's higher, yeah. So you can see that this is what I call a KCB trade, whereby you know that the market is going to go to a certain target based on the day chart, and then subsequently every day, as long as the market is above OP, or you can do this little trick. Now, the KSI is actually green in color, right? So that means you know that the boys are buying. Now, how much trust you have KSI? I had to leave it to you. I have full trust in my KSI. I do this every morning. I do this every day. I trade with it every day. So I know exactly how much confidence I have with my KSI. So if KSI tells you that the big boys are buying, then it's very simple to trade. Now, you know that our system itself have a very interesting algorithm whereby we say +1 and -1 is the KTR per day. Now, I think everybody should know by now our KTR is very, very accurate. In fact, many people actually comes into our system is just look at the KTR every day to buy, sell. Okay. All right. So now I ask you a question. If you know that the market is going to go up, right? The strategy, what would the strategy be? Very simple. Above OP, just buy. Okay. So that is the first strategy that should become in your mind. If you know that the market is going to go up or go down. Now, that's why your homework is very, very important. You need to find a KCB, a situation whereby you have a down market with the boys buying, something like this, right? Then you know that you can buy, then do the opposite trade. Then after that, okay, above OP, you buy. That is a strategy that you can adopt. How about the strategy two? How to buy from the bottom? Now, the buy from the bottom itself, obviously, you need to activate your KTR -1, -2, and -3. Now, why don't go after beyond -3? As I told you before, right? Anything beyond -3 is usually a seller market. I sit there, spend time to you. Beyond it, it's always a seller market. So that's why KTR -1, -2, -3 will be the best trade for you to enter the market. All right. So if you know that the market is going to go up every day above OP, you stay to the buy side. 2, if the market break OP, you don't sell. You wait the market to come down to KTR -1, -2, -3. Then you can buy from the bottom. Then if the market is bullish, then you can actually activate your K trend. Yes. Now, if the market after it come down, right, it will hit, let's say, KTR -3, whatever. And if the market is to recover, generally speaking, it will be conducting a few rounds of K trend, right? If those people who don't know what is K trend, you need to watch the video one. I'm not going to explain again over here, but I'll do a step by step on how you can do that. So basically, it's all right. If the rate is getting higher, all right, so that is where you can add position on the intraday chart to maximize your winning. So basically, example, right? If you make $200 today, all right, rather than we do a withdrawal and spend the money, put about $200 back, and then use this $200 to make $400. Then you have $600. Then $600, let's aim for 1,002. You get 1,002. So within 4 or 5 days, actually, right, you can actually make back your capital. Now, for competition wise, is right, based on my past experience, it's very rare to see any individual making 100% gain of the capital. Normally, I can say most winner take home at 30%, 40%. If you can make 100% of your capital, right, I think you're already a winner already. Top 10, definitely no problem. And with some luck stuff, right, easily top 3 also can be done. So that's why I say trading is not difficult. Don't stress yourself. Wait for a good opportunity, right? We won't be telling you which market is better, but you have to do your homework. Okay. So you got an idea now? Yeah. Okay. So you got an idea. Let's just move into this day and we can see that point. All right. So on this particular day on the dollar yen, the market opens here first, right? That is the opening price, and then it came down. All right. So the thing is this: as the price comes down, you know that the KSI is green in color. So that means that you can buy above OP or you can buy below OP at -1, -2, and -3. Okay. So got an idea now? Let's zoom into the day itself, right? So you can see on this day whereby the market went up. Now this time around, it did not have any KTR -1, -2, -3. But the only thing it has is the MLP. The MLP state was smashed down initially. Then after that, only when it goes above MLP, then it's a yellow candle. Then you notice that the buy is quite simple and straightforward. Can you see now? Yeah, so the only thing is this: we don't know which technical point will be on your chart any day, right? So any day, any technical lines is on your screen, on your chart, you utilize that to form a base. And the coloration of red to yellow must happen. Then you can buy safely from the bottom. Understand? If I understand this, everyone press number 1 right now, yeah? Now, someone asked me, is $1,000 enough to win this competition? I'll be honest with you, the right amount to put in is 3,000. Now, let me tell you why. You see, $1,000, right? You use 1% is 10 Sing dollar. You use 2% is $20. Now, $20, if you trade gold, you get hit very easily. If you trade S&P, maybe it is good, but it's very slow. If you trade the Dow, I think 2% very fast will be hit. So the contract size of the contract size of the product is also a matter point. So if you don't want to be a point by later, if you lose like 2-3 times or 1%, and then you get stressed up usually, and then you just anyhow trade. But if you put 1,000, and if you use 1%, it's already it's $30. You can still go down a little bit. You can trade lower, right? So that is the reason why I say that you can really, you should consider in psychologically that don't open account too small. 3,000, I think is fine. 5,000 is pretty good. You don't need 10,000. Honestly, 10,000 is really a bit too high. It makes you feel that the bar is too high. 3,000 is a very ideal figure to start off with, okay? But then again, the minimum is 1,000, yeah? Just let you know. Okay, so with that understanding that we just go deeper, you will see my point already, yeah? Okay, now you see. Oh, okay, I didn't have the extra chart here. Okay, never mind. So you can see that when the market basically goes above the MLP with a yellow candle, that is where you can buy. If the market break down below MLP and then go up again, this way you can buy and so forth. So in this case itself, right, your stop loss just put somewhere 20 pips, 30 pips away from the market if the tail is too far away, and then protect your capital. And then if you know that the market is going to go up, then just have to follow through the upside, right? Okay, so is there a K trend here? Of course, there's a K trend here. If you take notice, you understand this. Okay, let me show to you, yeah? Now, this particular red candle, do you see that? Okay, let me change the color. Okay, everyone take a look. I cannot go bigger because this is the only screen I have. All right, so you look at this particular candle, we call it as A. Right, A, the closing price is like a doji, right? Okay, good. Now, where is the next red candle cluster lowest point? It belongs to this guy here, that is B. So A and B are actually part of a uptrend K trend, whereby B is technically higher than A. Now, some of you say, but that then we don't need your indicator. We just have to see the chart we can do. I can tell you it's not the same. Okay, you don't believe me, you try it on your own. Yeah, maybe by luck you can get it done, but not every time. Because the coloration is very important. Every market I have a different set of parameter for the market. So how can you tell me that one single candlestick will be able to confluence everything? That's not possible. All right, but then again, I'm not here to argue with you. I'm here to tell you that if you reconsider what to do, I think you will be able to make some money out of it. Yeah. Okay. But then again, this is your choice. Now, you look carefully, the lowest closing is somewhere around here, and that is C. So the next one, a single red, that is D. Can you see? Now, I love D the best. Why? D itself is a single red that basically comes down pretty big, right? But instantly, the next candle, right, it turns yellow and goes up. Can you see that? Sorry, I cannot expand the view, yeah? So because of that, right, immediately you know that the market is not going to sell, it's going to buy. But prior to that itself, right, because of the red candle at D, people will sell. They'll panic and they'll sell. And this is where you go in. So that is why I love D, where it's a single red on a K trend. That is my personal favorite. Okay, I'm telling you now because I want you to make money from the market, yeah? So all clear? If all clear, press number 2 right now. Single red on the uptrend, on a K trend, and then the KSI obviously has to be green. And then after that, the red yellow candle close up almost the entire red candle. That is the best deal. Okay. All right. So that is how you can win in competition. Now, after that, do you see here got E, then here got F, and then here got G. Now, what happened is that E and F are still valid K trend movement. But come to this G has spoiled the whole party. So that's why you shouldn't be going beyond 4 to 5. Okay. For K trend itself, right? Maybe you see 4 times to 5 times already. I think that is enough. Do not try to do more than that, right? Because I've seen enough time the market will just go sideways and then pull back suddenly. So it's not really worth it. So A, B, C, D is good enough. All right. Then of course, you say, okay, I want to let it run all the way to the end. Sure. Just leave a position and let it run. But don't put the stop loss too near. Put the stop loss too near, you get hit by the market. All right. So this is how we will do the timeline. All right, I give you more example to see this better. Okay, so everyone take a look. This is the Dow Jones. Now, by right, the Dow Jones supposed to go up because everything was positive. Color was yellow, KSI was green, KCX is doing well. Everything was good. But as a trader, remember, we don't have a view in the market. One thing for competition, you cannot have a view. You can have what we call it as a target where the market will go after you sell or buy, but you cannot say that, oh, because I want to buy gold, I'll stick to gold itself. I mean, that is not the most healthiest thing to do. But again, no wrong, but just that not the best. Okay, so now you see why I take this candle in particular. Why? Because if I get to sell, my first KCB will be somewhere around here. Can you see that? And then my next KCB is actually somewhere around here. Hold on. Okay, not too sure who turned on the microphone. That's all right. Okay, so because of that, right, I know that this is A and this is B. I have a very clear one slap down to target A and target B. All right. Now, of course, you'll say, okay, how do we know it's going to come down? Yes, I also don't know. But then again, when you see a chart, look at the candlestick. The candlestick, usually the pump up exercise, right, is towards the end. Towards the start, sorry. Towards the start. The letting go itself, right, is always to the end. Yeah. So that is the reason why you can see the market coming down and to A and B, and we will see the 5-minute chart to understand this better. So the price is 50699. Okay, we are right. Okay, so let's take a look. Yeah. Okay, so basically from this chart, you can see very clearly that the market is below OP. Now, below OP, there's only one thing to do is to sell. Now, of course, if you sell the first wave, you make some money, but you sell late, the market rebound, then that's something I can do. Yeah. That's why it always makes sense to wake up a bit early just to feel the market, right? Just to feel the market. Okay. All right. Let's go deeper now. So basically, this is what happened during the day. The market started off nicely. And then after that, and after that, the market basically from OP go down all the way and touch the pivot 2. And once it touches the pivot 2, it doesn't go down there all. You can buy somewhere around here. Yes, you can buy here. Now, how to buy that? That's below OP, right? Don't worry. Go to the 5-minute chart. You should be able to see a market bottom. You may see a market is turning up. You can do that. Now, remember, in competition itself, you can use any time frame, M1, M5, M15, M30, H4, you can use any time frame. Even if you don't want to sleep through the night, you want to trade through the day, I can't stop you. Okay, but I'm just telling you that more haste, less speed. Yeah, by doing that, you may not get the best result. Okay. All right, so because of that, right, if you go down the lower time frame, you will be able to see this little punching around of the figure. And then after that, as usual, the market, if you're going to be buying up, it will rebound. Okay, can you see that? The market really rebound and hit KTR +0, which is actually the OP line. Yeah? Then after OP line has been done, do you notice something very interesting? The market just couldn't go above the OP. Now, guys, it's very, very important. The OP is the most important rule of the market. I say this many, many times. So if the market basically touches OP and come down, that means the selling pressure is very strong today. But vice versa, if the market goes up instead, break above the opening price, then yes, the market to go up is very, very strong. Okay, it's very simple analogy, which makes people find it so amazing. Say, how can that simple, simple, can it be done that way? I mean, this is how things should be doing. All right. Okay, so the next 2 hours, 3 hours, you notice they do nothing much. The market is really sideways, doesn't move anything at all. Now, apparently, some of you have given up because it's so slow that you see, oh, Hong Kong's moving, China is moving, gold is moving, but only your Dow is still not moving. You get frustrated. Now, guys, remember, funds don't go everywhere. They can only go at a certain place, certain time, whack the market out, and then after they extract themselves out, then they go somewhere else. Again, it's like a locust. So not too sure what will happen for our turn. But the thing is this, we are trying to build our this portfolio up. So that's why we want you to join the competition. Okay, sideways already for many, many months. We just had to wait. And then after that, remember, so that is a blue diamond over here. So once I saw the blue diamond, I know that this diamond is going to bring us a little bit of luck here as well. Let me just show it to you. Okay, so once that is done, you can see that there is a K trend. Why? It's coming down, right? So check the yellow cluster. Whenever you are selling, you want the yellow cluster. Okay, so guys, 1, 2, 3. Which one has the highest closing price among the three of them? The yellow cluster. 1, 2, or 3? Highest closing. Okay, waiting for your answers, everyone. Okay. The answer is number 1. Number 1 has the highest closing among 1, 2, 3. Okay? Yes. Okay, number 1, yeah, has the highest closing. Now remember, guys, our crazy chart is not the same like the conventional, whereby if it's up candle, it will be yellow, down candle, it will be red. It doesn't work that way. And if you still think that way, that means you really need to go for the crazy basic class, yeah? You shouldn't be joining this competition. It's not meant for you, okay? Okay, all right, so let's go back to the reason. So the thing is this, the number 2 is actually lower than number 1 closing. Although number 2 looks like going up, right? But it's not. Okay, so number 1 is actually the highest closing. Okay. Okay, let's continue. Okay, something wrong with my screen here. Okay, continue. All right, so after that, what happened? You can see the chart basically start to come down, right? Very good. So now everyone take a look. This is number, this is C, and this is D. So therefore, which one has a higher closing, C or D? Now, earlier on was a bit tough to see, but this one shouldn't be any issue. C or D has the highest closing. Right, everyone, please participate in the comment box. If not, how are you going to learn? All right, correct. C is the higher closing. So now how do we put this trade in? So this one, listen, yeah, everybody. Now, on the 5-minute chart, you will notice that D is closing below C. And on the day chart itself, you can actually see this guy, right? You flip it to the day chart, and then you monitor the chart or the bar that is after D. If the bar, we call it E, if E start to turn from yellow to red, that means that there's something wrong here itself. All right, so this one you must be watching the screen. There's no other way for you. You'll watch the screen as long as you notice that E start to turn to a red candle. All right, and then you know that that is happening. You should know that it's time to go for the sell instead. Yeah. All right, so you can see after that at E1, that is where you should be selling. Now, for some of you actually care, wait a minute, that is a double diamond, right? So isn't it a buy? No. I already said double diamond, when it happens, it will make a buy very strong, but it's not a buy. Can you understand this? That means that if you are doing very well or not so well with, example, with maths here itself, right? You just need to put in more effort. By copying someone, it doesn't help, yeah? Hold on. Okay, there's something wrong in my side here. Couldn't get the split screen up. Never mind. All right, so after that, from D, it goes all the way down to the first technical point, which is MLP, and then stop there. So MLP has once again proven to be a very effective tool. All you need to do is just learn the MLP by heart, how to use it, what are the steps and everything, yeah? Okay. All right, then after that, after you have C, D, E, everybody, this is F. Can you see the F? And you can see from here, F is lower closing than D, right? F closing, the highest closing is lower than D. Am I right? Yes or no? All right, yes or no? Okay, so now everybody, you know that F is actually lower than this D, right? So because of that, the moment the candle here turns red color, you can consider to go in to sell. All right. Now I cannot say it's 100%, but I can tell you that I've been using it the last few days, and the result has been pretty exciting. Okay, got the idea now? Okay. All right. So now we know that right already, right? So let's take a look on the rest here itself. Hang on. Okay. All right. So now after that, after E and after D and F is done, the market come down. So what happened? Everybody take a look. This is where it gets very important. Please stay tuned. All right. So after that, the market rebounded. Now we all know that the main cutoff point, it will be actually the closing price of the yellow candle that is here. Okay. All right. So what you need to do is very simple. Take a 5-minute chart. You draw the over here. Okay. So what you see is that the market basically come down all the way, travel down all the way to the KTR -1. And then after that, we have a new yellow candle. And then after that, interestingly, the market goes up. But what is interesting is that the market never closed above. It never closed above the line that I drew. So which means that, example, hold on, something wrong with my annotate, not functioning properly. Okay, so after that, it couldn't go any higher, and then the price pull back down, and you have another wave of selling, right? You can see that, right? Okay. So now the thing is this, take a look, everyone. So now you still have the K trend intact. So let's say this is A and this will be B example, yeah? So B closing happened to be below A's closing, right? So very clear, the downtrend is still ongoing. Then after that, the price go down, expected the price go down, the market came back down. And after that, a strong rebound come in. So now why should we draw that line, right? So now it's a new person. So let me just redraw for you. Okay. Then after that, the thing rebounded and the yellow candle go up. All right. And this time you notice that it went above and close above this guy. So that means that the current B is higher than A closing. So when B closing is higher than A closing, all right, we don't need to think already. If B closing is higher than A closing, this market, the downward trend has canceled. The downward trend has canceled. The market most likely is going to go up. And after that, truth be told, the market really went up. Understand? So that means that a wave, one wave, two wave, three wave, fourth wave, five wave, example, yeah. Where five waves already, the market now, if you look at it's actually oversold. So a lot of players will actually choose to get out. Okay, so there's something to take note of that. Yeah. So if you have basically make your money over here and here, all right, you will make quite a fair bit as long as you follow this. Okay. All right. So now the thing is this, if the downtrend is over, it's an uptrend coming in. Okay, that's a very good question. Uptrend, what must you have? You must have the red cluster getting higher. So do you have that? No, the closing here is on this guy. The closing here most probably on this guy. So which means that the closing is actually lower, right? So that means there isn't any uptrend potential. All right, doesn't have. All right, after that, the price has to go up, go up, go up, go up, and that's where your rules have to come in. When the market failed to stay above the KTR, stay above the pivot 1 or 2, that means something big is going to happen, right? Right. So this one we have said this many times before. Whenever there is when the market touch the pivot, that means that there should be a big movement coming in, either all the way up or all the way down. And all you need to do is just follow the color, and the color is actually red in color. So you have to sell. Okay. All right. Now, everyone, pay attention. I told you before, right? Pivot is really our best of the best indicator. We've said this many times, and I can tell you, many customers are sitting and watch for it. So now this is P1. This is P2. All right. So the thing is this, I told you before, right? When the market opens above the pivot 1 or opens below the pivot 2, all right, this is a strong buy and this is a strong sell. Okay, this is the classic pivots, classic. So the other thing is this, what if the market opens, go up to pivot 1 and fail to go higher, which is like this case right now. Now this will be a very, very good sell. So how do we sell? Very simple. You can sell during the candle, or you sell the next day. Which is here. Your stop loss, you just put at any of the red or the candles, the highest point. All right. And that will be all you need to do for pivot. So when you see the pivot touching the pivot for 3 to 4 times for the last 4 minutes, I think it's basically telling you something big is going to happen. And truth be told, after that, the market cracked down below the diamond line, and then the selling comes in. So when everybody will buying, all right, you are selling using the pivot, and you can see that the market really come down to where it started. All right. Now, so some of you say, well, Kel, the KSI is green, and then how? Remember, KSI is just only a forecasting tool. It doesn't predict future. It follows statistics. So if the statistics is in line with yours, then of course go for it. But if it's not in line, then trust what you see on your face. All right, that's important. Okay, so that is how you can find the K trend, trade on the K trend, and the positioning of basically the size to make sure that you can win this competition. Okay, so I know some of you are very, very aggressive. You're trading 4 or 5 times per day, some even 10, 20 times. That's it. The timing, how many trades is not considered in your final result. Yeah. Okay, so let's continue. So you can see right now a bigger picture. What you can see that the market try to go up, it failed. Now this is where I get me excited, because the market purposely did this. The market actually purposely touched the MLP and come down. Now this is very simple, all right, that you should do. All right, so you can see what you have right now is that you have another set of K trend right here itself, guys. Can you see it? All right, so from this is A, and this is A, B, C, D, E. All right, can you see that from A to E, all of them are on K trend, downward trend? Can you see that? All right, so the thing is this, once the thing turns red in color, you don't need to wait for the next candle. You can actually start to do your selling. All right, but of course that is on the 1 minute chart. So what you do is this: your day chart is 1, your 5 minutes is the main center, your 1 minute chart is to change the color internally for the 5 minute. So actually you will know that the market has already bottomed out. Yeah. Okay. All right. So when we know the thing will change again, you can see the market goes sideways again and wait for a while before it goes and move in again. All right. So that is how you can use your K trend to your advantage by selling at the right price. Okay, that's how you use the K trend. All clear? All right, if everybody is clear, press the next button. Next number, yeah? That'll be number 4, right? Number 3. Number 2. Number 3. Yeah. Okay. All right. So I repeat now, the step to do for your trading side for K trend is that when it's downward trend, you focus on the yellow cluster, yellow. And then the key point is the closing price, yeah? All right, then if it's down uptrend, you will focus on the red candle, yeah? All the red candle, you will take notice of them. And same thing, it has to be a higher closing price. And what you need to do is this: once you saw a K trend forming on your 5 minute chart or your day chart, you can go to your minute chart, a lower time frame like a 1 minute, to exercise an early trade and put a stop loss nearby. Because if you notice this by now, guys, if you really notice this by now, if the market is a K trend, you will notice a very clear thing. You notice If you actually notice this, I'm gonna share this with you now. You're gonna love this. Yeah, hold on. Clear my screen. Okay. If you notice that if it's going to be a successful K trend, you notice this A and B. Okay, you notice that? This A and B. Then you notice this guy again. This is C and D. All right. Okay. What do you see, guys? You notice that, okay, almost every time when the market is going to do a K trend, the C, which is the or A, the C that and A that are the yellow candle, you notice that D and B, the red candle, right, usually very rare, surpass the high of A and C. That means that the red candle that follow next usually will not break the high of A or C. Usually not. Okay, usually not. You see, look, you see my point? You see? All right. If it does, that means a change of trend has happened. Can you see that, everyone? If you can see that, right, press yes. That means that actually from the market, you know what to do, and then how you improvise to the 5-minute chart, and then you go down to a lower time frame, the 1-minute chart, you can actually see for yourself. Practice this and you'll know my point. It's very interesting. Okay, so is it vice versa for the upside? Yes, it's vice versa for the upside. Yeah, okay, let's try a few more examples. Okay, let me find for you, yeah? Can you see this? So this is a K trend down, and you can see that the red candle here doesn't go beyond the yellow candle high. It doesn't. So that means your range can be so small, no? So your profit can be 4-5 times, no? 5 times profit, no? That means if your range is very small and you dare to go in your trade, and because the range is small, if the market comes down by 5 times, right? Every $100 you put in, you make $500 back. So let's say you put $50 in this competition for per trade, which is very high, but because K trend is so accurate, you can consider doing that. You basically put $50 in and you can make 5 times as a profit, you make $250. Now that's 25% return in a single trade itself. Oh my goodness. Of course, you say, Cal, but what if I get it wrong? Like I say again, it's a lot on the trust. Do you believe in your K trend? Do you believe in a day chart? Then you make your decision. You understand? So example, right, this particular case why we can able to sell, because look at it. The day chart of today is below OP. That's the first thing you should know, right? And it also basically there's a KCL that breaks the KCL, and the KSI is red. So basically everything called for sell. So if everything called for sell, then you have a 5-minute chart or 1-minute chart that give you the sell signal. Of course, you should take. But Cal, you say, but Cal, wait, this one, the KSI is green. How? Remember, KSI green means you just have to do a smaller number, or maybe go in, fast out. It doesn't mean that you cannot sell. You can still sell. All right. Cannot be just solely on OP only. That is not able to make money. You need more than that. Okay. All right. So after that, you can see very clearly that the market slowly, steadily go down. All right. Okay. Now I find a buy for you guys. Wait, I find you a buy. Too many sell. Okay. So this is the Nikkei. Nikkei open. Now Nikkei back then was all-time high. Now no one stop it. So then again, can we trade? Of course you can trade. Let's take a look. So this is a Nikkei trade, right? The Nikkei opens, right? And you know Nikkei itself is a very bull market, right? Very bull. KSI green, very bullish. So of course the strategy will be let it come down to KTR -1, -2, -3. Once it hit -1, -2, -3, and U-turn, where is a buy? Here. This is where you buy. Can you see that? The market basically break OP, break KTR -1, KTR -2, and almost KTR -3, and then stop there. Then the KSI start to flip color. That is your first sign of problem, or at least opportunity for us. And then after that, you notice the market just go up, and you have the diamond line. If you draw a diamond line, you will know that it's a buy level. And of course, you just let it go. And in this case, both the MLP and the OP are about the same. So when the market breaks the OP and break the MLP, that was a very strong buy up. Okay. So now the market go all the way up already, right, to KTR +3, and you make some money. Okay, good. Now the question is this. Remember, I told you, if the market is above KTR +3, can we sell or can we buy? Can we sell? Can sell or can buy? When the market is above KTR +3, can we sell or can we buy? Yes, you can only buy, you cannot sell. Very good. Remember this. This is going to help you a lot in the competition. A lot of people, they lose money in trading is because when the market go above KTR +3, they sell, and they get killed by the market. Similarly, when the market is below KTR -3, you should focus on selling, not on buying. A lot of people try to sell, and get hit by the market. That is the wrong thing to do, yeah? Okay, so now, if you follow what I tell you, and then after that, the price goes sideways, but it's above KTR +3, when you see this red candle, that's it. That is the champagne popper. This is where you basically go in and then open your fire gun to buy. Why? Of course, the red candle here is higher closing than the red candle closing here, right? So definitely when the market turns to yellow candle over here, you can just bang, go in to buy. You don't need to wait. Okay, you don't need to wait for the yellow to finish. Don't need. Why? Because remember, right? You are in a competition mode. You need to be faster. Okay, but you must trust what you see in front of you. All right, and of course, the KSI plays a very big part. It is actually green in color, so that gives you the extra, reason to stay there. Okay, so this is how it goes. And after they went up again, did it turn red? Yes, indeed. So again, you do that again. But of course, this is a little bit too far-fetched already. So maybe give it a miss. Okay. But at the start one here, definitely you can catch again. All right, guys. So you can see when the market was coming down, the market come to KTR -1, came to -2, missed KTR -3, but when it rebound, that was already the first sign of buying because it hit pivot one, stop there, rebound. So this is where you're the lower time frame, you can use a buy over here on maybe 1 minute chart, it returns yellow. And then if you see this again, you add position, all right, into it, right? So that is how you say you position yourself and then add position along the way to maximize. Then of course you can actually do more trade like this to really give you the best bite on this, all right? All right, so this is what I can tell you about this competition. You just have to find big candlestick that's available on your chart. Second, apply what you learned in the candlestick class. All right, it's very difficult for me to explain again one more time. Right, but I can tell you that if you actually do that, you are very safe. And once you have that itself, like I say, if you are going to be late or anything, you can then you have to adjust your timing accordingly. Okay. All right, let's do one more example before we call it a day. All right, let me just show this to you. All right, so let's take a look on this particular candle. This is the S&P 500. Now, remember, I told you pivot is really one of my favorite, yeah? So when the market touches pivot, you must always remember it's meant for correctional movement. It works best for that, okay? So let's take a look what happened over here and you will understand my point, yeah? All right, so first of all, the market opens already above the MLP and and it's open quite high. So the question is that you should be buying, right? But the moment the market open, it's have to drop. And once it drop, it break this number first, 7600. Now, what is this number? This is a pivot 2. So let's take a look what happened to pivot 2 at that point itself, yeah? So what happened is that the market really did Okay, something wrong on my side here. Okay, the market came down from the OP mark, came down, went down and touched the KTR -1 exactly. Oh my God, exactly. So that is where you can actually go into buy again to push it up. Now, when you're on the way up itself, you know something interesting. The market failed to stay above KTR, stay above OP. That's a very bad sign. Right after that, the market just couldn't stay above the OP. And that was where things had to really develop. Everyone take a look. It's not something new. It happened before. Right? Some of you may be even affected by that. Let's take a look. Yeah. All right. So what happened? You can see that the S&P 500 came down to KTR -1, stopped there beautifully. Boys came in to buy. It pushed it up all the way towards the OP level. Then after that, it went sideways for a while, right? So everybody take a look at this. This is going to be very awesome. Okay, so watch this. The market went up first, couldn't go above the MLP. That is another key point, couldn't go above. And then you notice the start of the whole thing. All right, the market came down, stopped exactly at -1. Then it rebounded a little bit. And then you see this blue diamond appearing. And if you drop everything, you know that there is a problem here. Okay, and of course, you can see that once the market cannot go above the pivot 2, turning red, it will be a sell. And of course, the market, as you go lower, there'll be another sell off down, and that's where profit go in, and it stopped exactly at KTR -2. Okay, so what your profit margin is from this is your cost, and this is your profit margin. So we're talking about pretty good profit margin over here. Okay. All right. So you can see in many examples, when the market comes down, hit the pivot, cannot go down, recover, you buy, right? Okay, you're going to see that out of 10 times sell when the pivot is around, the impact is really incredible. Let me show you more example, yeah? Okay, so you see this one, same thing, the market gush up all the way, K trend, then hit the pivot 1, couldn't go up. Basically, after that, just keep on call for sell at the side. Okay, this is US palm oil. It will do the same to me. Okay. Now this is the Hang Seng Index. Same thing happened. The market was supposed to go up, but the market failed due to some issue there. And you can see once the market below OP, the market will come back down to hunt for the nearest KCB, which is somewhere around here, 39. It's Hang Seng, sorry, it's not Hang Seng, yeah. Wait, all the way came down to 25,000. Yeah, the opening price is here. All right, so with the blue diamond, once the market open, it doesn't feel comfortable below OP, just sell. Yeah, so all these are little tricks that I do every day to give some money for myself. Yeah. Okay, so over here you can see the market basically come down from OP, came down to pivot, exactly stop there, and ding dong, ding dong. Then after that, when the market break below the pivot 2, that's where the first wave of selling kick in. And then after that, you see, all right, you can see all the potential market sellers are there. All right, and then the price go all the way down until it hit this point here, whereby you notice that the market no longer go down further. That is where the stop of the downtrend will be. Okay, so how can you do that? How to make 1,000 to 2,000? Very simple. You just basically first round first, you sell. That is what you do. Then book some profit like 70%, take back the profit and add more over here. I mean, wrong, just cut, right? If it's correct, just follow the trend. And after that, you make the first round. Then the second round, a lot of people periodically say, okay, I think I enough already, let's buy. And then after that, they bought and the market go up a little bit. Still, the closing is no anywhere higher than here. All right, so that means that the downward trend is still going to continue. And the market go down again, so far do the same thing. Okay? All right. So what we have done is that the step by step to do the K trend, remember the steps, right? Forward, first of all, go and define day chart first. Okay, find a day chart that has a very big candle that's not replaced yet. And then after that, second, follow that chart particularly. Now, everybody, you have 15 markets to play, but of course, you don't need to play every single market, yeah? Now, the best market that I can think of for you is actually gold, but gold is out only Monday morning, there'll be movement. Other day is out unless Donald Trump go crazy. If not, right, usually about 10:30 Singapore time. After that, then you trade gold, be a better choice. Then, of course, you can also consider to do some NASDAQ or Dow Jones. Pretty still decent in the daytime. The movement is still relatively acceptable. Then the one will be doing DEX. DEX is going to be an idea on its own. Don't need to rely on the US market. If DEX want to buy, just buy. If DEX want to sell, just sell. All right, it's pretty cool. All right. So in this competition, of course, you're not allowed to, come together to work together as a team. Yeah. So if we actually heard that itself, right, the winner may face forfeiting. All right. There's something that I need to let y'all know. Yeah. And of course, you cannot have more than one single account to trade. Everybody can only contest with one account. Now, of course, can you burst the account and come back in again? Yes, technically, yes, you can. If you really unfortunately burst your account and you want to come back in again as a fresh try, yes, it does. But the competition, will they take the two numbers together? I'm not too sure. This one I need to ask. Yeah, this one I need to ask. Dylan, please check with the organizer itself. If they burst the account, the accounting, how does it really do it? And then you just notice tell to all the leaders. Okay. Okay, all right. No, just about I know, but just that the competition will be, can if they open a new account, or how would that happen? Yeah. So all these are little things that we can just ask deeper. Okay, guys, I just want you to know one thing itself. Really, my best trade is usually from the pivot. When the market breaks a pivot, I will sell, put a stop loss at a high, just to protect myself. That always something that I always do. All right. If the market hit the pivot like this, whereby go all the way up to the pivot, this is where I will buy, yes, because it's above pivot. But once it goes below pivot, I definitely sell. And if the market touch or nearly touch the pivot, I can tell you I definitely sell big over here. Yeah, because the pivot is a very strong resistance point, a very strong support point. If the market do touch it and then rejected by it, the selling or the buying will be very, very strong. Okay, so that is why you must understand this first. Yeah. Okay. All right, so this is something very important. Okay, Dylan has just updated, so everybody read his writing over there. Okay. All right, guys. So that will be all for today. I'm very sure you guys are gonna make good money from the market. All right. Take care, and I'll see you guys online later on. All right. Bye-bye.